Hey guys, we've got an exciting time as the reopening kicks off, as people start getting back out, as industry picks back up. There's a lot of opportunity in the market right now. And today I wanted to highlight three stocks, specifically three steel stocks that I think have a tremendous amount of potential to help you build your wealth and also to help you grow your income. This is all tied to the reopening of the overall economy, manufacturing, building, and infrastructure. And then also remember that in Washington, we've got a lot of stimulus coming down the pipe, and that includes a lot of infrastructure spending that should drive a lot of demand for steel. So let's just go ahead and jump right in today and take a look at some of these steel stocks that I think we should be looking at for your portfolio. So first off, I wanted to show you ArcelorMittal, which is ticker MT. Now, this company is actually one of the largest steel manufacturers in the world. In fact, they are the largest in North America, South America, Africa, and Europe. So they've got a lot of experience in the steel industry, and they are pretty much one of the primary companies that's going to be benefiting from not just U.S. spending on infrastructure, but around the world. As you can see, the stock has been moving sharply higher as people prepare for the reopening, and I think this could continue. Another thing that's in ArcelorMittal's favor is that the company is actually a very deep value stock, and investors are moving a lot of capital into value names. Now, when we talk about value, I'm simply saying that you get more profit for every dollar that you invest in the company as compared with some of the higher flying tech stocks that you're paying out the nose for without necessarily having enough profit to justify the prices. So when you buy shares of MT right now, you're paying just 7.7 times next year's expected earnings. So you're paying $7.70 for every dollar of earning that they are expected to pull in over the next year, and that should increase as we see more and more spending on infrastructure, on manufacturing, on all the things that drive demand for steel. So that's a great one to start with. And then the next one that I wanted to show you is shares of Nucor, which is ticker NUE. Now, Nucor actually has some specialty areas. They make milled products that are important for auto manufacturers. They actually make beams for construction. So as more buildings are being built, and refurbished, and infrastructures goes in for bridges and so forth, the beams that Nucor builds should be in high demand. And they also do a lot of steel tubing for conduits. They do rebar. Think about all the roads, and the rebar that goes into the concrete roads and so forth. That's an important part of Nucor's business as well. And they also manufacture raw materials like iron ore. So as other projects kick off, as other companies need more of these raw materials, Nucor is a great go-to company for them. So that's why we're seeing the stock move sharply higher. It's basically a bet on the reopening and infrastructure. And one of the reasons I like this company for your portfolio, and specifically for your retirement portfolio, is because Nucor pays a 2.6% dividend yield. That's a pretty good yield, and at the same time, the company should increase their dividend payments over time because their profits are increasing. Now, the company's a little bit more expensive than what we saw with ArcelorMittal. They're trading at 18.3 times expected earnings for next year, so you're paying $18 for every dollar of earnings that the company generates each year. But keep in mind, we should see these earnings continue to grow over time, and so that means that the stock may be cheaper when you look farther down the road as far as what you're getting for what you're paying. And then the final steel stock that I wanted to show you is Reliance Steel, ticker RS. Now, this company makes some specialty products for manufacturing companies, so that's a big play on the reopening trade. They also are involved in construction steel, and then they're also involved in the aerospace and defense area too. So they make more specialized type alloys and so forth that can be used. We've talked about how the rocket industry is really kicking off right now, and satellites and so forth. So Reliance Steel is more of a high-tech play on the steel industry and on basically specialty metals as well. As you can see, the stock is continuing to move higher. It's actually trading at about 15.2 times earnings, so you're getting good value for your shares right now. And they also have a 2% dividend yield, so you're getting paid to hold your shares while you accumulate your profits thanks to the reopening and infrastructure and many other trends that are actually working in Reliance Steel's favor. So those are the three stocks that I would look at right now as far as opportunities to profit from the steel industry. And there are many more reopening trades that we'll continue to be looking at here at the Rich Retirement letter. So please let me know what you think about these stocks and other plays that we've got in progress right now. Send me your emails at richretirementfeedback@stpaulresearch.com. I look forward to hearing from you, and we'll be back very soon. Thanks.